Why is the entire market fixated on a single ETF? Is it possible it's the perfect smokescreen for a much bigger story? What happens when a global superpower doesn't just approve an asset, but adds it to its own strategic war chest? Forget the speculation. This isn't about price action or influencer noise. In 2025, the US government officially added XRP to its strategic crypto reserve, putting it in the same category as Bitcoin and Ethereum. That single move reshaped the conversation from altcoin hype to national financial infrastructure. And it's already changing how banks, regulators, and global markets treat digital assets, creating a quiet but seismic shift beneath the surface of the daily market chatter. But the real question is, why this move? Why now? And if the government's action is the earthquake, what is the first tremor we're about to feel? Mark the calendar. October 2025 is not a rumor, it's a deadline calendar. The SEC faces a cascade of decisions on spot XRP ETF filings. Grayscale's decision deadline falls on October 18, 2025, the first major checkpoint. That's followed by others from 21 Shares, Bitwise, Canary Capital, CoinShares, and WisdomTree. Franklin Templeton sits just beyond on November 14th. Those dates matter, because an XRP spot ETF would mark the moment institutional capital moves from speculation to structured allocation. According to Bloomberg analysts, approval odds are already high, and Polymarket data suggests investors are betting 99% in XRP spot ETF. The significance isn't in hype, it's in access. A spot ETF gives pension funds, insurers, and ETF desks a regulated path to buy and custody XRP, turning institutional curiosity into measurable inflows. Analysts in the field are modeling $5 to $8 billion in institutional inflows if approvals materialize. Think of that as a concentrated hydraulic pressure test hitting a market with thin exchange supply. But institutional money doesn't just flow through ETFs. What are the real giants, the old money banks, doing behind the scenes? If you want to know when an asset has graduated from fringe to institution, watch the banks. Not what they say, but what they do. J.P.Morgan, $4.3 trillion in assets under management, is not playing Twitter opinions. In 2025, the bank reportedly began exploring crypto-backed loans that could accept XRP as collateral by 2026. That's validation in banker speak. Collateral equals credit. Even more telling, Scott Lucas, head of markets digital assets at J.P.Morgan, is confirmed to speak at Ripple's Swell 2025 in New York, November 4th to 5th. Imagine the world's largest bank, the one that once publicly criticized crypto, stepping onto Ripple's stage. That's institutional oxygen. The chatter on the institutional desks is that J.P.Morgan is quietly accumulating ahead of ETF decisions. Draw your own conclusions. This isn't just about hypocrisy. It's a signal of inevitability. They fought it. They failed. And now they are joining it, because the alpha is undeniable, and their survival depends on it. So the banks are capitulating. But what is the government's endgame with this strategic reserve? What are they preparing for? The White House signed an executive order creating the U.S. Strategic Crypto Reserve, listing only a few names: Bitcoin, Ethereum, and most importantly, XRP. This was deliberate selection, not symbolism. Governments stockpile assets to secure leverage and control future financial rails. Ripple's CEO confirmed XRP's inclusion, and the Treasury formed offices to manage custody and operations, formally elevating XRP from altcoin speculation to national financial infrastructure. When a government puts an asset into a strategic nest, it sends an undeniable signal to the rest of the world and forces every serious financial institution, custodians, auditors, banks, to build operational playbooks for it. It's a top-down mandate for adoption. That cascade lowers the barrier for every other pension fund, corporation, and bank to follow suit, transforming the question from should we to how do we. So the government is stockpiling. But how do they get corporate America to join them? What was the one barrier to entry they just annihilated? If you trade big blocks, execution matters. Unich handles $1.3 billion in OTC trading volume, supports 5.5 million active users, and has 500K plus followers on X. Their strategic partners include Kima Network, GT Protocol, Script Network, Superteam. Not financial advice, just operational context. Check the link in the description for details. Policy moves faster than markets can discount. In October 2025, the U.S. Treasury issued guidance, notices 2025-46 and 2025-49, that effectively exempts Bitcoin and crypto, which highly percent includes XRP, from the 15% corporate alternative minimum tax on unrealized gains. Translation: companies won't be slapped with a phantom tax bill on accounting mark-to-market gains they haven't realized. This is arguably more important than the ETF. Before this, any CFO at a Fortune 500 company looking at putting Bitcoin or XRP on their balance sheet faced a nightmare scenario. If the asset appreciated significantly on paper, the company could face a massive tax bill in the millions, payable in dollars, before selling a single token. Fear kept treasuries on the sidelines. Now that fear is gone, the leash is off. Corporates can finally accumulate without bleeding compliance risk. When you pair that with Washington's strategic crypto reserve, you get a full-scale policy weapon. The message is clear. Accumulation isn't speculation anymore. It's survival. The system just handed institutions the license to stockpile digital collateral while retail still argues over charts. But this isn't just a United States story. How does this power move fit onto the global geopolitical chessboard? Now to the global chessboard. BRICS nations are not idle observers. They're actively building alternatives to dollar-dominated rails. According to official BRICS reports, the XRP ledger, XRPL, is being evaluated as a backbone for a cross-border payment framework. Why XRPL? Speed, sub 5-second settlement, and cost. Transaction fees measured in fractions of a cent. BRICS are building BRICS Pay, a messaging and settlement layer for trade in local currencies. XRPL's architecture is attractive because it can operate as a bridge currency, potentially enabling gold-backed or local currency settlements outside the dollar and SWIFT. The US inclusion of XRP in a strategic reserve reads like a direct counterplay. If BRICS build rails that sidestep the dollar, the US responds by legitimizing and holding the alternative, partly to keep financial corridors open, partly to maintain influence in a multipolar system. This is where technology becomes geopolitical hardware. XRP sits in an awkward, powerful position, simultaneously being piloted by BRICS for de-dollarization and stockpiled by the US as a strategic asset. Dual acceptance like that accelerates adoption because it creates optionality for nations and institutions hedging between competing systems. So with governments, banks, and global powers all making their move, what does this actually mean for the market and the price? XRP has crossed the line from speculation to state policy. The US Strategic Crypto Reserve lists it. Treasury guidance removes the unrealized gains tax overhang. ETF deadlines concentrate attention. J.P.Morgan is exploring crypto collateral and putting senior leadership on Ripple's stage. BRICS pilots XRPL for settlement. That is power, not hype. My view, this is a structural re-rating setup. Policy, banks, and geopolitics align. When balance sheets move, narratives die. Survival belongs to assets with rails, custody, and real use. XRP is forcing that shift. Greed pushes institutions toward XRP's upside. A breakout above 320 with strong volume could mark an institutional takeover, targeting $3.80 to $4.20 in the short term, and potentially $5, $8 during a full rotation. Fear, however, is equally real. Failing to hold 270 could trigger a sharp drop toward 230 to 250, especially if the ETF flows thin order books and spike volatility. In moments like this, power consolidates in the hands of those who understand structure, while emotional traders get washed out. The stage is set. Policy alignment, institutional interest, and geopolitical tension are converging, and XRP is at the center of that shift. The question now isn't whether narratives will change, but who will adapt before the market forces the revaluation. Quick final note on Unich for viewers who want to act on infrastructure, not just headlines. The Unich IDO offers a low, fully diluted valuation, low FDV for the UN token, backed by a legal entity with referral rewards and NFT perks for early adopters. Again, not financial advice. If you want details, the link is in the description. When policy, product, and geopolitics align, markets do one thing: they reprice regimes. XRP sitting simultaneously on a US strategic shelf and under BRICS consideration is not comfortable for anyone who likes simple narratives. It's messy, it's dangerous, and it's where fortunes get made or lost. If you want to maintain this level of intelligence, subscribe. Then, in the comments, tell me the one move you think the herd is missing. I'll read them all. Stay sharp. Stay dangerous.